helping us have this historic event in this very beautiful space, which I think is historical to have the board here participating. And I want to thank all the legislative staff for their support. And I specifically want to thank Hecrian Martinez, who's the OPAL Executive Director. That scoring process and OPAL is a very important part of what we hope to be permanent reforms. So I want to thank everyone and welcome everyone to the Puerto Rico Economic Forecast Symposium. I know that we will all benefit from this vital exchange of ideas, and I hope that this will become a continuing and permanent feature in the development of the budget and fiscal planning process for the future of Puerto Rico. My name is Roberto Mujica. I'm Executive Director of the Financial Oversight Board and Management Board for Puerto Rico. And joining me today are distinguished members of our symposium panel. Ben Herzon, Executive Director and Co-Head of the U.S. Economics and S&P Global Market Intelligence. Joel Scali, Economic Policy and Advisor for the Federal Reserve Bank of New York. Gustavo Rojas Matute, Assistant Director and Economist of Moody's Analytics. Jose Villamin, Chairman and CEO of Estudios Técnicos. Sergio Marswatch, Policy Director and General Counsel at the Center for the New Economy. And Jose Caraballo Cueto, Professor of the University of Puerto Rico. A transparent and open dialogue is critical to good budget policy and fiscal formulation. Our panel here today represents an eminent cross-section of experts who will offer their perspectives on the current economic situation for both the nation and Puerto Rico. And we look forward to hearing from each one of them. The national economic outlook has dramatically changed since the start of the year. Indeed, just actually in the last 4 months. According to the Budget Lab at Yale University, the nation's average effective tax rate at the start of this year was 2.4%. And as of May 12th, the Budget Lab estimates it to be 16.4%. The Budget Lab estimates that even after families make adjustments to their spending habits, the minimum tariff impact on their consumption of goods, the average family will pay more for its expenses on an annual basis. This may be more relevant for Puerto Rico than it is in the rest of the country because of the relatively low median incomes. This reality has had a dramatic effect on the national economic outlook. As of January 20th, 2025, the blue chip consensus forecast for real GDP growth for 2025, an average of over 47 professionals, was 2.2% on January 10th. By May 9th, it had dropped to 1.2%. So a downward revision in 4 months of over 1.2%. I mean, a full percentage point. And as of January 10th, the blue chip economic forecast for headline consumer price inflation was 2.5%. By May 9th, it was up to 3.2%. The CBOE Volatility Index, you may know that as the VIX, is commonly cited as a measure of equity market volatility on any given day. And a reading above 30 is conventionally viewed as an indication of tremendous uncertainty and heightened investor anxiety. There was only one day in all of 24 that it was at that level. There have been 12 since the start of the year. Now, this all may be temporary, but only time will tell for sure. So I look forward to hearing more about the national economic outlook and perhaps some calming words from the panelists. From two of our panelists, Ben Herzon and Gustavo Rojas Matute. But here in Puerto Rico, we face risks that go well beyond the macroeconomic environment. In recent years, the Commonwealth budget has seen temporary, although significant increases in federal spending. Federal funds comprised 34% of the budget in 2017, and in 2024, it had been close to 46%. So you went from 34% of the budget to 46%. Now, going forward, these funding streams related to COVID relief, as well as some of the disaster relief programs, will be expiring. This was a known event. This is not a surprise, but it's a fact that's going to happen. And by the year 2027, Puerto Rico faces the possibility of a profound fiscal cliff in relation to the Medicaid program, unless Congress and the administration act to extend this funding. And until the federal budget, currently under development by Congress, is completed, the continuity of funding that the Commonwealth is relying on remains uncertain, not just for Puerto Rico, but for the states as well. So I look forward to hearing more about the budgetary risks we face from the panelists, and I know Sergio Masarch will be discussing that in his remarks. But the evidence is clear that the Puerto Rico economy greatly benefited from the influx of federal funding related to the COVID-19 pandemic. By the fourth quarter of 2021, employment in all the major industrial sectors in Puerto Rico had surpassed the pre-pandemic 2019 Q4 peaks. Employment growth remained strong in 2022 and grew by 5.2%, while manufacturing, for professional services, and business services, two industries that pay solid middle-class wages, grew 5.2% and 8.7% respectively. These are major growths, major increases. But over the next 2 years, following 2022, job growth was already showing that it was slowing. Total employment is on track to have grown just 1.2% in 2024, with manufacturing jobs falling 0.2%, professional and business services falling 1.7%. I hope to hear from panelists Scali and Villamil and Jose Carabel Cueto to address the question as to why the Puerto Rico economy isn't generating more self-sustaining growth. And I look forward to hearing from Gustavo's near-term outlook for employment and wage growth. We would also like to ask our presenters to consider some additional questions that will help us make our own assessment of current and future conditions. As we approach the end of the 90-day pause, how do you think the risk of tariffs will increase from current levels against the expectation that the administration will be reaching agreements that will bring the average effective tax rate down from its current levels? We have yet to see the impact of the dramatic shift in trade policy on inflation. So what is your outlook for inflation? How long do you think it will take before we see the full impact? And do you see any mitigating factors? The low interest rate environment that followed the global financial crisis appears to have come to an end, but moreover, remains to be seen how the budget being developed by Congress will impact the deficit and the debt of the nation as a whole. So what is your outlook for interest rates, and what do you see as the greatest risks for the financial market outlook? We expect growth in virtually all of Puerto Rico's major industrial sectors to slow further as the non-recurring federal funding streams end. Those were a boost to the economy, and they're now fading out. So what do you see as the leading sectors going forward, and which sectors do you think are most at risk as the benefits of federal funding recede over the next few years? On the labor force, Puerto Rico's labor force has been below 50% for a prolonged period. The question is, what keeps Puerto Ricans out of the labor force, and what policy remedies might have potential for being successful in drawing our residents back into the workforce? We all recognize that tariffs have costs, but we also recognize that they can create an opportunity as the U.S. strives to reshore some of the lost industrial base, particularly in the important pharmaceutical industry, which Puerto Rico has strengths. In addition to shoring up our electrical grid, what technologies should we be investing in so that Puerto Rico's human capital and physical capital stock are well positioned to take full advantage of any opportunities the new economic environment poses for Puerto Rico? Can artificial intelligence play more of a role in the economy's future without diminishing opportunities for future generations of workers? And what sectors other than manufacturing are most likely to benefit as we meet the moment? As we work to rebuild a culture of fiscal responsibility and integrity, we view this symposium as a key feature of that process. We hope that this is the first in many to come. And with that, I want to turn the floor over to our first presenter, Ben Herzon of S&P Global. We can't hear. We have audio. Ben, can you hold on one second? We're just going to turn up the volume a little. Can we have a volume ladder?
All right, how's it sound?
Okay, better.
Better? All right, so are we good?
Yes.
Yes.
So let me take the next 15 minutes or so to discuss our baseline forecast as we see it now and some risks around that baseline forecast. Next slide, please. All right, so here's the big picture. So in our forecast, the U.S. economy slows this year to a below potential rate, but does avoid a recession. Now, there are a few key factors that contribute to the slowdown. I'll just list them quickly here and go back over them a little bit later in my presentation. One is fallout from, obviously the new and large round of tariffs. Another factor contributing to slowdown are ongoing effects of the past Fed tightening, that is, Fed policy remains in restrictive territory. Also, we are looking at diminished tailwinds. There were fiscal provisions that were boosting growth, U.S. growth, until recently, and those sources of growth have gone away and in some cases have reversed. And finally, we do look for a continued weakening in equity values that weighs on consumer spending through wealth effects. Right, so a period of below-trend growth then contributes to a gradual rise in the unemployment rate. We expect the unemployment rate to peak at about 5% by late 2026. And our baseline forecast also includes a continued pause in Fed policy. That is, we think the Federal Reserve will keep the funds rate at the current level until the end of this year. As inflation peaks and then recedes, by the end of this year, the Fed will is expected to begin an easing cycle, lowering the funds rate to below the neutral rate to support the recovery that we expect going forward. So I think there's two key questions that the outlook confronting the outlook in this context. One is, why in particular do we expect growth to slow, and the second is why do we not expect the U.S. economy to tip into recession this year? Let's go to the next slide, please. Let me briefly address the second question first. Why don't we expect the economy to dip into recession? Well, when we issued our April baseline forecast, a little less than 2 months ago, that was right at the time. That was right after the administration had announced the reciprocal tariffs. Stock markets were tanking. Volatility, as noted earlier, had spiked, and things looked pretty dire at that time. So rather than switching our forecast to a recession call, we decided to issue a conditional forecast of continued, albeit muted, growth. And the condition was that we would see some financial healing in the coming weeks after we issued the base forecast, and that's in fact what happened. So equity values have since recovered quite a bit and are currently trading above the value that's included in our forecast for the end of the second quarter. That's the little gold line in the left panel. Furthermore, volatility has eased quite a bit. The VIX is now has eased and is now below the second quarter average that we included in our forecast. So financial healing has taken place. So when we updated our forecast this month, we continue to expect that the U.S. economy will avoid recession, and it's because, for several reasons. But the big picture is that we have seen a lot of financial healing, and so we do think that the U.S. economy can continue to expand. Next slide, please. All right, so let me go through this slowdown, the factors that are contributing to the slowdown. So we have this historic increase in the average effective tariff rate. What that does in our modeling and in our forecast is it passes through to prices. So the increase in the tariff rate leads to an acceleration in prices. We have core consumer personal consumption expenditures inflation turning up to a peak of 3.9%. Before turning down late this year. Next slide. This elevated period of inflation keeps the Federal Reserve on the sideline, as I mentioned earlier. And what I'm showing here in these charts are some key indicators in our forecast relative to what we expected in our November forecast. What's important about our November forecast was that was the last baseline forecast we published prior to including the policy agenda of the new administration. So this gives us a sense of what's changed and what's accounting for the markdown in growth that was mentioned at the top of this segment. So the period of elevated inflation keeps the federal funds rate higher than it otherwise would have been. This passes through to the 10-year Treasury yield and yields more broadly. So we have so the tariffs have led to inflation, which leads to tight monetary policy, which leads to tighter financial conditions generally. Next slide, please. The broad trade-weighted dollar, moreover, while it's come down recently in recent weeks, it remains above a level that we projected back in November. The combination of a stronger dollar and what we assume will be countermeasures imposed by other countries in the form of tariffs on U.S. exports. These two factors combined weigh on U.S. exports, which is another reason why we expect growth to slow. Next slide. And it's not just the tariffs and the economic fallout from the tariffs themselves that are contributing to the slowdown that we expect. It's also uncertainty about the tariffs, uncertainty about policy in general, but more specifically, uncertainty about the tariffs. And so there are a few measures of trade policy uncertainty that are out there. The one that we follow is one that's produced by the Federal Reserve. That's what I'm showing you here. And this measure of trade policy uncertainty has spiked to historic levels. In recent days, which you see the panel on the right, trade policy uncertainty has eased by this measure, but it still remains at historically high levels. What's important about this is that trade policy uncertainty can lead to pauses in capital spending plans. And if we've done our own research, we've all heard the anecdotal reports that uncertainty about trade policy is leading businesses to delay investment plans. Well, those reports are out there. We've done our own research that identifies a statistically significant link between investment spending and trade policy uncertainty. So this is a concern. Next slide, please. All right, so continuing with factors that are contributing to the slowdown. So the combination of trade policy uncertainty and the fact that Fed policy remains in restrictive territory has led to weakening in business fixed investment. Real borrowing costs, which is what I'm showing you in the panel on the left, are as high as they've been in 15 years. Expensive, high borrowing costs combined with trade policy uncertainty are contributing to a sharp deceleration in business fixed investment. We have it slowing quite a bit in 2025, and in fact, contracting in 2026 before growing thereafter. Next slide. Tight Fed policy has contributed to elevated readings on mortgage rates, which is weighing on housing starts. Next slide. And I had mentioned diminished tailwinds as another factor that's contributing to the slowdown. So we had seen in a couple of sectors some fiscal support. So the Inflation Reduction Act included generous tax incentives that led to surging spending on structures in the manufacturing sector, and in particular on structures built for the production of electric vehicle batteries and semiconductors. Now that spending has peaked already, and in our forecast turns down. So what had been a source of growth is now neutral for growth, and it is expected to be a drag on growth going forward. Similarly, the Infrastructure Investment and Jobs Act led to a surge in spending at the state and local level on infrastructure. Well, that spending too has peaked, and in our forecast is flat for a while. So these are two sources of growth that have gone away. These is sort of a diminution of tailwinds that are no longer supporting growth going forward. Next slide. Equity values. So we do expect equity values to decline. To understand this, I think it's important to sort of give you the context. The way that we value equities in our modeling is we use a dividend discount model, which basically says we take a projection of future dividends and discount them to present value with a discount factor that includes a risk-free rate and a risk premium. Now, the risk premium I'm showing you in the panel on the right, the blue line, the risk premium in recent years has been at historically low levels. That is, investors have been unusually sanguine about taking on risk in equity markets. So in our forecast, what we expect and what we assume is that the equity risk premium rises back towards back in the direction of historical averages. So this is another way of saying that from the perspective of our modeling, equities are overvalued, and once investors' attitudes about taking on risk in equities returns to normal, equity values will sag for some time. Next slide. All right, so all of these factors combined lead to a slowdown in GDP growth to below potential, especially this year, and this contributes to a gradual rise in the unemployment rate. It rises to above the natural rate, which is a peak of 5% before turning down thereafter. Next slide, please. Okay, so that's the baseline forecast, but there are risks around this forecast, both on the upside and on the downside. Our view now is that the downside risks are more prevalent than the upside risks. That is, there's sort of a downside bias, we think, to the outlook. The obvious risk of the forecast is the historic jump in tariff rates. We have a way to model the impact of tariff rates on the macroeconomy, and we feel pretty good about the model. But this is historic. We haven't seen this this magnitude of an increase in tariff rates in decades, in going back a century. So there is some uncertainty about how this will affect the macroeconomy. So let me talk about the risks on both sides of the baseline forecast. So there are, in an optimistic scenario, relative to our baseline forecast, tariffs would prove to be, say, not as high as we expect them to be, and countermeasures, that is, tariffs imposed on U.S. exports by other countries, would not be as high. An optimistic scenario might also include less restrictive immigration policy than is in our baseline forecast. I haven't talked about immigration policy yet, but we do assume slower net migration to the U.S. in our baseline forecast. So an optimistic scenario would also have less financial stress and a lower neutral funds rate. And these are all possibilities. They're lower probability possibilities than the possibilities that exist in our pessimistic scenario. Our pessimistic scenario is basically the recession that we would have forecast were we to switch our call to a recession call. So in a pessimistic scenario, there's more financial stress. That is, financial markets respond more unfavorably to current tariff policy than we have in our baseline forecast. And there's reduced business confidence that translates into cuts in production and inventory pairing that of course weigh on growth. Next slide, please. So briefly, in our optimistic scenario, as I mentioned, tariff rates are lower. this means there's less consumer inflation in the near term. Next slide. A lower consumer inflation would bring about more supportive, more accommodative Fed policies. So the federal funds rate is lower in an optimistic scenario than in our baseline. And the 10-year Treasury yield, as well as all yields in general, would be lower. Could turn out to be lower. There'd be generally more supportive financial conditions. Next slide. Now, in the pessimistic scenario, so this is sort of our recession scenario. In a pessimistic scenario, financial markets just respond more unfavorably to the developments that we're seeing. The VIX would spike in a pessimistic scenario, and equity values would turn out to be weaker than we expect. Next slide. Business confidence would be weak. Businesses would look to their own outlooks, not like what they see, and would cut their rates of production, and this would lead to inventory pairing. In fact, a lot weaker inventory outlook than in our baseline forecast. And finally, in this scenario, the Federal Reserve would be cutting interest rates sooner, and monetary policy would be much more accommodative to try to counteract what's going on in the outlook. Next slide. So this is sort of the bracketing, sort of the plausible bracketing around our baseline forecast. So our baseline forecast is for slow growth, no recession, and a recovery. In an optimistic scenario, GDP growth turns back up from current rates and approaches rates around 3%, like we saw last year. And the unemployment rate, after hitting something like 4.5%, begins drifting down and converges on the natural rate over the next couple of years. In the pessimistic scenario, we show a 2-quarter recession. It's a mild recession. The peak to trough decline in GDP is 0.5 percentage point, and the unemployment rate rises to about 6.5%. So this sort of summarizes the risks around our baseline forecast. And with that, I would turn it back to you.
Thank you. Do you want to say anything? Ben, thank you very much. I want to just acknowledge Cameron McKenzie, board member, just arrived. Also, former Hacienda Chair Jesus Santa that's here.
Yeah, he's with me.
And right there.
Senior advisor on the Ways and Means Committee.
And I want to open it for opening remarks from the chair of the Ways and Means Committee.
Thank you very much, Robert. Good morning, everyone. It's an honor for me, on behalf of the Puerto Rico House of Representatives, to be here participating part of this symposium. And happy to have you here in the first district, the best district of Puerto Rico, District 1 of San Juan, my district. So also, I want to acknowledge and thank Robert and his member of the board, Mackenzie, and everybody, his team, for the leadership and first for invite us for the first time in history. I think it's the first time in history that we have this kind of symposium in the Puerto Rico State Legislative Assembly. And the information that we gather here is going to be very excellent and good for us in order to take informed decision to have fiscal transparency for Puerto Rico and a better economy for Puerto Rico. That is what we're looking for. Everybody here is looking for the same thing. A good economy for Puerto Rico, fiscal transparency, and a good Puerto Rico for this generation and the generation to come. So this is very good for us, and also it's established the good communication that we have with the fiscal board. So we are very pleased, and thank you for having us here. And at the end of the day, we have a little bit of a list of questions that we have for the distinguished panel, so we leave that to the end. So thank you very much for having us here, and welcome to the Puerto Rico House.
Thank you. And Ben, I'm sure we're going to have questions for you, but we're going to save the questions for the end. So next, I want to go to Joe Ascali and your presentation. Joe, can you wait one second before you start? Because I want to acknowledge the ranker who just came in, if she has any opening remarks that she wants to make.
Thank you so much, Mojica. It's a pleasure to have you here with all the team members of the board and everyone who can contribute on our discussion. It's important for us to be present and be able to be inserted in this type of forums because we need to do our job here from the House of Representatives. I acknowledge our president of the commission and everybody here. So we're here just to be a part of the team that makes things happen. Most importantly, my focus in municipalities and how to make them keep on working. And some of you know that I'm from a team of municipal governments that I've worked for 20 years, so I'm here focused on that, but I'm open to continue to receive the opportunities that we can have from our group here in front of us today. Thank you.
Thank you. And Cameron, do you have any remarks?
No, I just wanted to say thank you for everyone that's here. You know, this is probably one of the most important things that need to be discussed on the island, which is the outlook of our economy. And I really want to congratulate the legislative branch for being such a part of this and focusing and taking this so seriously. So I'm very grateful of everyone here. I'm grateful for everyone who's taken time out of their schedule to be here, and looking forward to the conversation.
Thank you, Cameron. Now we'll go to Joe Scali of the Economic Policy Advisor to the Federal Bank of New York. Thank you.
Hi, thank you very much. Hopefully you can hear me.
Yes.
Great. I'm Joelle Scully. I'm an economic policy advisor at the New York Fed. Just to give my disclaimer, these views are my own and do not represent the views of the New York Fed or the Federal Reserve System. For background, the Federal Reserve System is broken into 12 districts, and New York's district includes the islands of Puerto Rico and the U.S. Virgin Islands, which is why we monitor Puerto Rico's economy. Although I do say I wish I was there in person. If you can move to the next slide, please. Great. Okay. So as a note, we don't forecast the island's economy specifically, which is a little unfortunate for a forecasting call. But this is going to be a picture of where we see the Puerto Rico economy now instead. So I'll go over some of the data that we have, and Mr. Mujica gave a little preview into what we're seeing now. In summary, what I'll show you is that after a very long, decades-long decline, Puerto Rico's economy has begun to grow. We're seeing especially strong growth in private sector employment across most sectors. With these stronger economic conditions, the population appears to have stabilized, the population loss that we'd seen for a long time. Home prices, in part due to higher demand, short supply, have really been growing quite rapidly on the island. And finally, we're starting to see some stabilization in the household sector. We'd seen rising delinquencies, and we're starting to see those finally level off both on the island and on the mainland. Next slide, please. So to give a big picture, economic activity overall, it's frustratingly measured on Puerto Rico with a pretty substantial lag. And so that's the GNP data I'm showing here on the gray line with the orange dots. We only have data through 2022. I'm overlaying this with the Economic Development Bank of Puerto Rico's Economic Activity Index, which you can see they track pretty well. And what I'll point out is if you take a big step back, you can see there was a very long decline in economic activity between 2005 and then punctuated when Hurricane Maria hit in 2017, and then again by the COVID-19 pandemic and the accompanying, unfortunately, earthquakes. What we've seen since then, however, after that yearly 1.8% decline in growth, is that there was a turnaround. And since mid-2020, we began to see growth in business activity after this very long period of economic decline. This is the first protracted stretch of increasing business activity that Puerto Rico has seen in almost 2 decades. Now, with this in mind, 2024 was a little less positive, a little bit more flat, but many of the components of this index remain positive. And in some of the official data, what we're seeing remains pretty positive. So if you turn to the next slide, I'll show you some of that. So here I'm showing you, this is total employment. It's indexed to 2020, just before the pandemic in February of 2020. You can think of this as the change. And you can see, again, the deep job losses that were experienced after the hurricane in 2017. For comparison here, I'm including the US mainland as well as the US Virgin Islands, just as a point of comparison. You can see that job losses were more steep in the US Virgin Islands, although it's a very small economy. No, since the pandemic, again, we all saw a very steep loss in jobs in 2020. But what I want to point out is in the last 5 years, the growth on Puerto Rico in total employment has been much faster than it has on the US mainland overall, where we've had a very strong economy since. By contrast, in the US Virgin Islands, employment has been quite stagnant. We've seen virtually no recovery from the pandemic. Next slide, please. Okay, so here what I want to show you is that the growth in Puerto Rico has been notable for a few key reasons. Now, first, Puerto Rico has had an unusually large government sector. In fact, during the early 2000s, about 3 in 10 jobs in Puerto Rico were government jobs. Now, since the restructuring, there has been a sort of resizing of the government sector, and now that's just about 20%. It's still larger than the mainland overall. Now, during this period of shrinking of the government sector, we've seen strong growth in the private sector. The private sector job market has really expanded, and private sector employment on the island is now the highest it has ever been. So the contraction of the government sector has made some space for the private sector to grow. And it's continued to grow at a pretty steady pace, about at the same pace of the US mainland overall in the last year. Next slide, please. I'll talk here a little bit about the industry composition, the business composition on the island. So just to give you an idea how to interpret this chart, this is private employment, and each of these are the share of the total picture. Now, if it's larger than the outline, that indicates that Puerto Rico has a larger share than the mainland of that sector. And if it's smaller than the outline, that indicates that Puerto Rico's share is smaller than the mainland. So what I'll point out here first, I just want to take a big step back. I think one thing that's a little surprising is that the island's business composition is pretty close to the mainland overall. Their healthcare is one very glaring exception here, and the mainland has seen exceptionally strong growth in healthcare, where Puerto Rico's healthcare sector has lagged. On the left-hand side here, you can see that I've grouped these in color based on sort of rough industry ideas. I just want to point out that the tourism sector has been a little bit underpowered in Puerto Rico, especially considering it's such a beautiful place with so much potential. I'm comparing this with the entire US economy, and the leisure and hospitality sector is about the same size as that on the mainland, which is really surprising considering the US economy overall is very large and diverse. To put this in perspective, Florida, which is a state that has a very large tourism sector, has about 15% compared to Puerto Rico's 13%. And Hawaii, which is another island economy with a similarly large tourism sector, has 24% of their employment in leisure and hospitality. Other than this, I just want to point out that on the right-hand side, these are higher paying office jobs. You can see that these are about the same size and share as the US economy overall. Next slide, please. Now, instead of the shares here, I'm showing the net changes in employment. This is the number of jobs that have, this is the job change since February 2020. And these bars show the number of jobs added by sector. Now, in total, Puerto Rico has added about 80,000 jobs since February 2020. Using those same categories, I'll start with the green, with tourism-related services. There's been very strong job growth in leisure and hospitality. It's 21% since early 2020. There's been a significantly increased appetite for travel and experience since the pandemic, and Puerto Rico has definitely benefited from some of this. We've seen growth in retail trade as well. Now, on the other side, moving to the blue bars, these are these higher paying office jobs. There's also been strong growth in the business services sector. We do see substantial job losses in information, although this is not dissimilar from what we see on the mainland. One last sector I'd like to highlight, which is important considering that the federal transfers coming through, is in construction. There have been a very substantial job growth in construction sector jobs, almost 40% more jobs in construction now. Those are in that red cluster in the middle than there had been before the pandemic, in part, of course, because of those federal monies coming through. I'll just mention briefly that the US mainland does not look like this. It's been very dominated by healthcare, where almost 40% of the new mainland jobs have been in healthcare since 2020. That's especially true, actually, in the New York area, where we've seen very, very strong growth in healthcare and more tepid growth in other sectors. Next slide, please. Now, with this growth and employment, the unemployment rate is the lowest. It's really close to the lowest it's ever been in Puerto Rico at 5.5%. But there's been, I think, what's been a little surprising is a rise in the labor force, which we take to be a pretty good sign. The labor force has grown by about 17% since 2019, after, as you can see here, a very long decline. Now, one caveat, it's something that we're not sure about, is that there's some possibility that this growth in the labor force is really due to people moving from the informal to the formal, sort of off the books to on the books, in part because of some federal incentives to be on the books recently. But again, though, this is very good news to see this growth after such a long period of decline. Next slide, please. And accompanying this labor force growth, or perhaps because of it, Puerto Rico had seen a very long time decline in population, primarily due to outmigrations to the mainland, but also because of declining fertility. We did see the population stabilize in the official data in 2024, where the population was flat. It stabilized around 3.2 million residents. Next slide, please. So here, what I want to show you, though, is that, if you were to be skeptical of the official data, if we look at some alternative data, we're actually seeing some even signs of growth in Puerto Rico in the population. So on the left-hand side, I'm showing you net domestic airline passengers. This is the number of people coming minus the number of people leaving. So if this is above the zero line, which is that bold line on the left-hand side chart, that means that more people are coming to the island than going. Now, you can see for a very long time, this was a negative, this was below, meaning that more people were leaving the island. But more recently, we've started to see this turn positive. On the right-hand side, what I'm showing you here is data that I'm going to show you a little bit more in a minute. This is the Puerto Rico population with the credit report. And you can see that the stabilizing population happened even a little bit earlier. This is our data from the New York Fed. You can see that the population stabilized really in 2022. Again, a very good sign for the economy. Next slide. Next slide, please.
Let's see if we can get her back. While we're waiting.
Yeah, Mr. Chairman, we want to recognize that we have here in the room Senator Ada Alvarez Conde, Senator at large from the Senate of Puerto Rico, and also a House member from Ponce, District 24, Angel Furquet, and the Secretary Director of the Ways and Means Committee and former Treasury Secretary Nelson Ransom. We see here with Ramos. Perez.
Perfect timing. You're back.
Oh.
I text her.
Hey, Joy, you can go ahead. Yeah.
I'm so sorry about that.
No, it's
I
perfect.
got booted off somehow. Just to briefly say that the house prices on the island have increased, with the growing economy. There's been increasing demand for housing. I understand that short-term rentals are a big part of what's been sort of supplementing demand on the island, though, such as Airbnb. Next slide, please. Now, I'm going to turn again back to the New York Fed's data. This is our consumer credit panel. It's based on anonymized credit report data. It's something unique that we have, which is why I wanted to spend some time talking about it. Here, I'm showing you Basically, I wanted to talk a little bit about how households in the island are doing. Now, to give you an idea first, this is the percent of people that have different types of loans. Unsurprisingly, auto loans are a little bit more prevalent on the island than they are on the mainland. I'll point out something else is that mortgages, in spite of the fact that home ownership is higher on the island, it's a little bit lower on the it's a little bit lower, less chance of households having a mortgage. Many households own their homes outright. And lastly, I'll just mention student loans are just about as prevalent on the island as they are on the mainland. And I want to talk about that next. So student loans are something that surprised me a little bit. Now, auto loan balances generally are a little higher among Puerto Rican households compared to mainland households, in part because cars cost more. I think student loan balances are something that surprised me a bit. Given the lower incomes on the island, I think it's surprising that the average Puerto Rican student loan borrower has a balance that's very close. Next slide, please. One reason that we've been worrying about this is because student loan repayment has recently started again after a 5-year pause. And we see that about 1 in 4 Puerto Ricans who have a student loan due have missed their payment. That puts Puerto Rico in towards the higher end of the states if we rank them like this. And you can see this on the map my team published recently. Next slide, please. Another place where we see some pressure on households is in the rate of missing credit payments, both for credit cards, which I'm showing on the left-hand side, and auto loans on the right. Now, this is something that we had been keeping a very close eye on nationally. These rising delinquency rates after the period of pandemic forbearance were something that had been a little bit concerning. What you can see is that recently they've leveled off, both on Puerto Rico and on the U.S. mainland, which we take to be a really good sign. They had been artificially low during the pandemic, in part because of the forbearances and other stimulus. You can see in Puerto Rico, they fell even more steeply than on the mainland, which is in part due to the very generous stimulus packages that were available also on the island. Next slide, please. We see similar patterns for mortgages. I'll note that mortgage delinquency on the island has historically been a little higher than on the mainland. But I actually think this picture makes it look a little bit worse than it is. When I compare like the percent of Puerto Ricans that are behind on their debt, this is balance weighted. When I look at this as an individual weighted, things look about the same on the island, which is the first time in a long time. But here you can see they're rising and they've leveled off a bit. Next slide, please. Now, in short, there's been a return to growth on the island after the pandemic. And I think there's some risk that some of this growth has, of course, been in part due to the federal monies coming in. I think what remains to be seen is whether this is kicking off a virtuous cycle of growth and whether this progress will continue. Hopefully the other presenters will provide a better picture of that. Thank you, and I'll turn this back.
Thank you, Ms. Galley. That was very informative. Next, we're going to go to the Assistant Director at Moody's Analytics, Gustavo Rojas Matute.
Thank you. Can you hear me? Yes. Oh, thank you. Thank you very much for the invitation. I feel honored to be invited to this panel. I'm looking forward to share my ideas with you, but also learn from all the feedback I'm going to receive from you guys. I think I can move this stuff, right? Okay, so also I want to thank Joelle because one of the most recent performance she talked about it, so I also included in my presentation, but then I will have more time to speak about talk about climate change and other stuff that I left for the last part of the presentation, and I wasn't sure if I could have time. So yes, there are a couple of messages here that I want to deliver today in this presentation. The first one is regarding the recent performance of the Puerto Rico economy. It's stable. I think the greatest achievement of the most recent years of the Puerto Rican economy is that finally is stable after a series of unfortunate events during the last 2 decades. You can finally feel that the Puerto Rican economy is stable, and it's also showing that data is not only showing in the labor market or other economic data which we usually see, but also, as Joel mentioned first, in the out-migration data too. I mean, it's easing, it's decreasing significantly, and it's a good sign for the Puerto Rican economy. The other message, however, in the first message, I also want to say that the economy is stable, but yes, the labor market is flattening. There are a lot of uncertainty around the forecast. And the second message is that regarding the forecast, regarding the future, is that the Puerto Rico's growth rate is set to remain positive. We are still seeing, in the same sense that Ben mentioned with the U.S. economy, our model is a global model that then filters down to the U.S. model and then filters down to the U.S. territories and the states. So it's basically incorporating most of the global assumptions we have in the model are filtered down to the Puerto Rican economy. So that is something you're going to see there. So it's set to remain positive, but compared to other states and territories of the United States, it's weak. It's still very weak. And that is one of the probably things we are trying to solve in the island right now, how the economy is going to grow in the future. This is, I don't know what's, it's not moving. Can I try this one? No, it's stuck. All right. Okay. It's there we go. Okay. Okay. We are back. Oops. All right. Very, very quickly. Yeah. Joel also mentioned this. Yeah. The Puerto Rico economy is now. Oops. It's stable. This is what you see. This is the whole picture of the GDP. At Moody's, our data team has the ability to estimate the GDP on a quarterly frequency. So we use the economic activity index to produce a quarterly frequency GDP. Unfortunately, we don't have data. We only have data to the most recent data of the GDP is the fiscal year 2024, which ends the second quarter last year. So we only have economic activity index. We are going to talk. I would like to talk a little bit about that. But it's stable, as you can see here in the whole picture. After that series of unfortunate events, the economy is in much better shape. It's also recoupling with the U.S. economy, which is also very significant. As you can see here in the growth rates, the green line is the U.S. economic growth rate. The blue line is the Puerto Rico growth rate. It used to be coupled until around the mid-2000s, 2003, 2004, and then it decoupled completely, and now after the pandemic, it seems like they are now back. This is good news also for the Puerto Rican economy in the sense that it's now recoupling with the U.S. economic growth, and also this is also something that Joel mentioned, that delinquency rates are increasing in Puerto Rico, but also it's not an isolated phenomenon. It's also occurring in the mainland, and the reason is because we have been living with the high interest rate for a while, since 2002. So it's 3 years with very high interest rate, and that is probably creating more pressure on burden on the households. All right, so in more detail now, we have here the different sectors and the different sector labor employment in different sectors. The index starts right after the pandemics, and then what we can see here is that the economy is being driven by three main sectors. We see here clearly two different groups. The first group is led by the construction sector, which is the green line. And surprisingly, one of the interesting things is that this is the first quarter. It has also, we also have, are showing there data for the first quarter of the year, no, actually January and February, but what we are seeing there is that it increased. So sometimes we see that January is very slow. I mean, the start of the year is very low in terms of construction, but despite a lot of uncertainty, potential cuts in the funds, we are still seeing that construction is still moving well. The second line is transportation and warehousing, which is very related with construction. I mean, materials, etc., that are being used in the supply chain. And the third one is, the blue one, is leisure and hospitality, which is driven by tourism. I mean, tourism is booming in Puerto Rico. You are going to have a very good year, I think. We actually, in our model, boost a little bit the employment in leisure and hospitality for this year. You're going to have 30 concerts hosted by Bad Bunny, and he's bringing like around 300 or 200, or almost 300,000 more tourists than the average of the third quarter. And that is going to boost the employment in the tourist sector for at least a quarter, but probably it's going to carry out a little bit forward in the future. So that is going to be a good news, at least for this year. So we are not forecasting that for the rest of, but that I think is important. The other good news here is that the second part of the group is stable. It's not growing, but it's stable. And that, always, as I said, you can see el vaso medio vacío o medio lleno. So if you are not seeing that group falling, so that's good. It's, at least it's telling us that the rest of the economy is also in a good, at least in a better shape than used to be before the pandemic. All right, so just one quick thing here. This slide is not for this year. This slide is for last year, but I want to show something. And I think I'm going to point out the importance of this event today, Mr. Mujica, is actually, if you see the forecast, we were forecasting last year for the fiscal year 2025, you see a lot of different trends, positive and negative. It's a lot. That dispersion, what is reflecting is uncertainty. And this is not the uncertainty of this year, which has been transmitted by the new administration in the mainland. This uncertainty is because we still need more data. We still don't know what is going to happen with the island, with construction, how construction is adding more, and what is going to be the future in terms of infrastructure and in terms of other different sectors rather than tourism and construction. So moving forward, so all our assumptions are based on the disbursement of this disaster relief. If this disaster relief does not exist, then we need to move to the downside scenarios, okay? But we are still assuming that this is going to occur in the timeline of the fiscal year 2026, 2035. I mean, that is basically the next decade. And based on that, we are assuming that in our baseline. Our baseline is a most likely outcome. It's the outcome that is most likely to occur rather than the downside, etc. But I want to mention also the downside risk we have. For instance, here, this is the unemployment rate. We are seeing the unemployment rate for Puerto Rico slightly growing this year. to around 6%. But it's still pretty good. I mean, it's in terms of when compared with the 8, 9% or the 15% that we saw last decade, being stable around the 6% is a good number for the unemployment rate. However, if we go to the downside scenario, which is what the downside scenario is what we call the S3. We have S3 and S4 scenarios, and the narrative behind the downside scenario is that there are more global tensions, more higher tariff and retaliation from other countries. The Federal Reserve decides to keep the interest rate higher for longer than basically, in our baseline in Moody's, we are now forecasting or expecting cuts in the Fed funds rates this year for in July, September, and December. So if in our downside, this is the baseline scenario, but in downside scenario, we will basically expect higher interest for longer, then we are going to see a higher unemployment rate reaching around the 8%. This is the U.S. economy basically falling into recession, and the Puerto Rican economy also falling into recession in the downside scenario. But in the baseline scenario, as we can see here, the non-farm payroll, because the unemployment rate will remain very stable, the non-farm payroll employment is going to also remain very stable. There are, you may know this, but there are a couple of different surveys to measure this. This is the establishment survey. This is the members of the BLS go to the establishment and ask if they have been creating more jobs. But this one is the number of employees, the household survey, which is the one that they ask members of the household of the population if they has been employed for the last week, if they are getting a remuneration for that activity. So, but in general terms, we are still seeing a slight slowdown this year and next year because of the U.S. economy is slowing down, but not significantly, and we are still seeing a very stable labor market driven by the federal funds. That's something very important. And of course, tourism, we are seeing tourism slowing down, but still keeping a significant number of jobs in the market. Here I'm gonna just point out a couple of things. Yes, we just revised the data or update the data for the population, and it is actually what you all mentioned it before, is improving. It's still the growth rate, the natural growth rate is still negative. There are more deaths than births, but it actually improved. As you can see here, the difference between the April baseline and the May baseline, we now have a slight more higher population than we were forecasting previously. As Joel mentioned regarding the out-migration, we also have the same, so I'm not gonna, this is the same measure, which is the net arrivals in the airports, is showing that actually net migration is turning between positive or around zero, which is good. I mean, this is basically less Puerto Ricans fleeing the island and moving to the mainland in search for a better future. It means that the labor market, the stability of the labor markets in Puerto Rico is keeping more Puerto Ricans in the island. This is another alternative data we have. This is from Equifax. This data from Equifax is basically what measure is the changes in the zip code in the banks, in the accounts. That, so if you are in Puerto Rico and you have your account in Puerto Rico, but then you move your zip code to Florida or to New York, this is what it's measuring. So it also showing an improving and significant improvement in the out-migration if we use it as a proxy of out-migration measure. And that's why we are now improving our forecast in net migration too. It's still a little negative, but much better than used to be previously, very near to zero. Okay, so I'm gonna move a little because I ran on time, but I'm going to take advantage that my control was not working very well. So, so the most recent data of the economic activity index is also reflecting a slowdown in economy, as we can see here. But I got some news is that they are actually revising some of the data. And one of the main preoccupations of the data was actually the contraction in the gasoline consumption. And I know they revised that because the gasoline consumption was actually dragging down the economic activity index more severely than we all were expecting. So I know that data is improving, but I think for Puerto Rico would be much better to have a GDP in a more timely frequency rather than just seeing the data that it already ended last year, which is the fiscal year 2024. So it would be much better if we have more GDP. But going here to the GDP, what we can see here is for the fiscal year 2025, as you can see, there is a slight slowdown. This is the forecast. I mean, what you can see here in the green line is the forecast. We have a model using the forecast, but we also have a nowcast model, which uses the data of the economic activity index. I mean, the forecast is when you have data up to today, and then you can project the future. But the nowcast is that you know the fiscal year 2025 already is basically ending in June, right? So it basically passed, but we don't have data. So we use the economic activity index to nowcast, so this is what's happening now with the GDP. And it's not reflecting, it's actually reflecting a negative trend, but this is probably going to be a little subject to revision, as I mentioned, because of the situation with the contraction, with the gasoline consumption. But in general terms, both data suggest there is a slowdown, but that's not necessarily mean a decline in the GDP. It's because last year, the 2.1% was actually better than expected for many stakeholders in Puerto Rico. So I basically try to summarize the growth rate by fiscal year. This is what we are seeing for the next 5 years. As you can see, it's very weak. It's a very weak economy. It's a very weak economic growth, not even reaching the 1% for the next year. And the reason for this is basically if we are feeding the economy with only funds, federal funds, there is a moment where the multiplier effect loses its effect. There is no more multiplier effects of the fiscal expansion. So you are gonna, one day you have 0 workers in construction. The next year you have 100 workers in construction. But if you keep the same funds, you are gonna have the same 100 next year. So the growth rate is 0. The good news is that you are keeping the jobs. But the bad news is that you are not growing. So, and this is what we are seeing in the effect of the federal fund and the reason why Puerto Rico obviously needs another factor. So I ran out of time, but just gonna go, sorry, or maybe I can leave this for the debate later, but this is house prices. We are not gonna talk about this, but just a couple, three more slides. I'm sorry for taking more time, but this one is a measure of inequality. We did by taking data from blocks by blocks from the Census Bureau. As we can see here, Puerto Rico ranks as the most unequal state among the U.S. states and territories of the United States. And San Juan is the metro area, the most unequal metro area of the country. And just a couple of things additional. Chronic risk, this is chronic risk or chronic hazard is related to climate change. Chronic risks are estimated based on patterns, climate patterns, like increasing in the temperature. As you can see here, you have San Juan, you have Mayagüez, Arecibo, Guayama, and Ponce among the most the most critical metro areas in terms of chronic hazard. Acute hazard is measured by more severe events like hurricanes or earthquakes. And you also see here that the vulnerability of San Juan and Guayama, for instance, among the metro areas. So I just wanted to point out that because I think when thinking of Puerto Rico in the future, you also need to address the inequality situation, or you also need to address the risk related with the climate change scenarios. So this is all I do have.
Thank you very much, Gustavo. Next, we're going to go to Sergio Marswatch regarding the Puerto Rican economy from the policy. He's the policy director of the Center for New Economy. Thank you.
Thank you. Thank you very much for this opportunity and for the invitation. Say hello to all my fellow panelists and to the members of the board. I don't know if the presentation is ready. Sure. I usually like to take a little bit of a historical step back before I start speaking about the current situation in the government. About the economy of Puerto Rico. Puerto Rico's economy has been ongoing for 500 years. It did not start with the pandemic. It did not start with the 2007 world global crisis. Looking at growth over the last 70 or so years, we look at basically two periods in economic growth in the island. Believe it or not, there was some method to the madness at some point in Puerto Rico. Back in 1945, when the world was completely deglobalized, I mean, it's very difficult for human beings alive today to think about the kind of world we lived in 1945. Germany was in ruins. Japan had just been bombed by 2 nuclear bombs. China was still undergoing a civil war. India was closed. Europe was in ruins from Normandy down all the way to the outskirts, the suburbs of Moscow. There was no trade. There was basically very little financial transactions. The only people moving from one place to another were soldiers and prisoners of war. In that situation was when a group of people here in the island determined we have an opportunity to bring U.S. capital, apply it to the labor surplus we have here in Puerto Rico, and move our economy from a traditional agricultural-based economy to a modern economy. And that's what's called the export-led model. Back then, there were essentially two models to grow your economy. You could do import substitution, which is what many countries did, especially in Latin America. You could do export-led growth, which is what Puerto Rico did and several of the Asian tigers later on. By and large, it worked. As you can see from the graph, the economy of Puerto Rico actually outperformed the economy of the United States for 25 years or so, between 1950 and 1975. When Puerto Rico started moving towards the second stage of export-led growth in 1975, which required investment in heavy capital-intensive industry, the entire world economy underwent a tremendous shock. It's the first oil crisis. It so happens that Puerto Rico was betting on cheap oil to establish a refinery complex here in Puerto Rico and use that refinery complex to link to chemicals and plastics. That did not happen. Unfortunately, we're still living with the consequences of that decision. You can see not only the ruins of the Commonwealth Refining Corporation in Huánica, but most of our energy generation is in the southwest or the south of Puerto Rico, precisely because it was thought out to provide power to that industry. So after 1975, the government retooled the model, if you will, and there were four things that were done in the 1970s that basically carried Puerto Rico until the early 2000s. First of all, we increased government employment, which increased from around 62,000 in 1960 to about 184,000 in 1980, an increase of 196%. Second, we increased public debt, which increased from around 600 million in 1962 to 5.7 billion in 1976, an increase of 826%. Increase in federal transfers also happened during this era from 1970, where we had around 330 million in federal transfers. We go up to 3.2 billion in 1980. So we have an increase in public debt, an increase in government employment, an increase in federal transfers, and Section 936, which allowed the repatriation of profits from Puerto Rico to the United States without liquidating operations in the island. Prior to that section of the tax code, U.S. companies that wanted to bring their profits from Puerto Rico to the United States had to liquidate the operations here, and a lot of them were loath to do that. So this was a much more powerful incentive. That incentive lasted until 2006, and with due respect to all my colleagues here, if we open the lens beyond the pandemic and look a little bit farther back, specifically looking at 2006 as the baseline year for this analysis, we see that real GNP is still below the level it was in 2006. It's actually 13.4% less than it was in 2006. Employment is down 8.7% relative to 2006. Population is down 16% relative to where it was in 2006. Now, to be fair to my colleagues' presentations, if you look at 2020, we do see the slope of the curves to start moving a little bit upward, both in employment and in real GNP, and the population curve actually stabilizes. I do want to mention, though, that population growth is a function of two variables. One is net migration, and the other is the natural growth rate, which is the excess of live births over deaths. That second component in Puerto Rico is still negative. I mean, out-migration is still negative, but the second component is a lot harder to change. We still have more annual deaths than live births in Puerto Rico. So this graph also raises the question of whether or not we're measuring our GNP and employment numbers correctly. Look at the amount in gross domestic fixed investment. This is as measured by the planning board. It has increased 54% since 2006, and the slope is significantly steep. So we have been spending a lot of money in gross domestic finance, which is what you expect, right, from federal funds, construction. But yet, the impact on employment and real GNP has been fairly weak. So there's a couple of explanations there. We have to figure out which one is the one that applies. We just could be measuring things wrong, which, it could happen. Our national accounts are old. Also, we have a high income, we have a high import leakage, so the multiplier is relatively low. The amount of imports in Puerto Rico are huge, so that tends to weaken the fiscal multiplier. Or another factor that could be affecting employment is that we're seeing people moving from the underground economy to the regular economy where they're counted. It's not really that we're having that significant growth. We just have to dig a little bit more into that. Over the last 20 years, though, we have had a series of shocks. The end of Section 936, the financial sector restructuring in Puerto Rico, a lot of banks closed during that period. We had the government bankruptcy, the hurricanes, and the earthquakes. Looking at the two current official forecasts, and it's interesting because they seem to show different economies, even in the short term. And this is just to say, this is hard. I mean, doing this kind of forecast is not easy. And again, I do question the amount of, especially going forward, with this type of growth, around 1% and even negative in the outer years, depending on which of the forecasts you look at. This is the planning board, this is the fiscal oversight board forecast. Whether or not that amount of employment that we are forecasting is actually going to happen. Is that a real number? In terms of the risks of the outlook, this is an understatement. There's a lot of uncertainty, both in the political and economic scenarios. We're watching significant reordering of the post-1945 geopolitical and economic order. Nobody alive here, actually, unless you were born like in 1929, has seen the level of tariffs that we're seeing right now. Nobody has a playbook for this. The U.S. is actually regarded by many now as an unreliable actor in the international arena, both in the areas of trade, finance, as well as foreign policy and security issues. I want to focus domestically on the risks that I see to U.S. institutions in the short term because they will affect us directly. We're seeing challenges to institutions such as the separation of powers, equal protection under the law, due process, that are highly correlated with economic growth and investment. So to the extent these things are eroded, we will face lower economic growth. Some analysts and political science professors are actually questioning, is the United States still a rule of law country? We may be seeing what analyst Professor Ernst Fraenkel called the rise of a dual state. Basically, you have a normative state that respects and applies rules and laws as they usually were, relative, and also a prerogative state where rules and laws are applied in a much more arbitrary fashion. To give you a precise example of what I'm talking about, you could be a graduate student in Boston one morning and wake up the next day in an ICE detention center in Baton Rouge, Louisiana, without even showing up to a trial, without even going to a judge. So that's what it means to live in a prerogative state. That means living in a state where the government acts capriciously, almost randomly, and there's no rule of law that protects you. Obviously, the problem here is that you can be one day in one system, under the normative system, and everything's going well for you, and you can wake up the next morning under the prerogative system, and everything will be a living hell. And this is not only for migrants, this is also happening to members of the armed forces that identify as trans. This is happening to people that are losing their contracts with the federal government without due process. Universities that are losing their grants without the proper termination procedures, government workers in the federal government that are losing their jobs without the proper notice and the proper severance payments. So we're seeing a broad, large-scale assault on private sector institutions, NGOs, academia, civil society groups, media companies, law firms, all are facing significant persecution by the federal government is the only word I can use. Given this scenario, I think there are two risks that are particularly important for Puerto Rico, basically because we don't control or very little that happens with them. First one is the risk to federal funding. As has been mentioned already, Puerto Rico has increased its reliance on federal funds over the last 10 years. If we look at the fiscal 2016 budget for Puerto Rico, we had approximately $6.8 billion out of a consolidated budget of 23% were federal funds. For the last certified budget by the FOMB, this number includes disaster relief and COVID-19 support. $15.3 billion of federal funding out of a budget of $33.2 billion, or 46%. The risk to federal funds arise from 5 different sources. First, we have executive orders and the actions by the Department of Government Efficiency. Mostly, the target here are DEI programs, climate change programs, spending related to green energy projects, and unspent COVID-19 funding. We also seen the cancellation of contracts and termination of grants, both to NGOs and academia. For the time being in Puerto Rico, we are talking about $800 million in government funding that has been arbitrarily canceled, and at least a little bit over $500 million on energy projects, $345 million from the Energy Department, and $147 million from the EPA. Rescission requests are basically requests by the executive to rescind specific appropriations. The director of OMB has said that they plan to use this during the Trump administration. So far, they have done very little with this tool. They essentially sent a request to Congress to rescind or reallocate certain funding. There, the main risk for Puerto Rico is the unspent money by FEMA and CDBG. This was already mentioned by Gustavo. In theory, this money should be safe if it had been obligated. I highlight the words "in theory." And I also highlight that the administration has shown significant willingness to disregard the rules and do not follow due process. The current reconciliation bill that is being looked at by Congress presents a different set of risks. Reconciliation is essentially a complicated procedure that allows the Senate to close debate with less than 60 votes. So any measure can be brought to the floor for final passage and debate and passage, I'm sorry. The main objective is to extend the 2017 tax cuts, but fiscal hawks are arguing for significant cuts to entitlement spending. The risks for Puerto Rico there are mostly Medicaid and PAN, the Nutritional Assistance Program. It appears that both of them are safe for the time being, at least for this reconciliation process. But we do point that new state cost-sharing percentages for food assistance, as well as increased verification of and work requirements, could be applicable to Puerto Rico in the outer years. We don't know when, but it could happen. One thing that could affect us right now is that there are limits on adjusting the Thrifty Food Plan, which is the basis for calculating the benefits of the Nutritional Assistance Plan. To the extent that those adjustments are frozen, there will be real cuts. I mean, in real terms, there will be real cuts to beneficiaries because the diet, if you will, the diet basket will not be adjusted. On the benefit side, there are two things that we can point out. There's a 2-year, I think maybe 3-year increase in the child tax credit, which includes Puerto Rico, from $2,000 to $2,500, which should benefit Puerto Rican families. And there's this thing called the MAGA saving accounts for newborn kids. It's basically a $1,000 deposit by the federal government to each child that has a Social Security number. In theory, that should apply to Puerto Rico. I haven't seen anything to the contrary yet. The fiscal year 26 budget is still being planned. Here we have multiple risks to Puerto Rico. The skinny budget, as they call it, was sent recently by OMB to Congress. Congress will start looking at this probably in the summer. Here, there are proposed eliminations, reductions, or reviews for a whole bunch of funding programs that could have a huge impact in Puerto Rico. We're talking Head Start, Title I funding, state rental assistance, CDBG funds, LIHEAP, which helps with energy costs, NIH funding, quote-unquote woke FEMA grant programs. By the way, that phrase is used in the budget. It's not defined, so God only knows what constitutes a woke FEMA grant. The DOE renewable green energy programs, again, the new Green Deal is not defined in any law, was a label the Biden administration used to sell investment in renewable energy. So to the extent that you put in all caps, the Green New Deal, God only knows what the hell they're talking about. There's also talk about cutting back climate research grants for the NOAA, rural development programs, NSF grants across the board. It's highly unlikely all this will be passed, but we don't know right now which of these programs will be hit. We can assume some will, others won't, but ex ante is very hard to make that prediction because it depends on the political process in the United States. Finally, there are impoundment threats. Impoundment is basically when the executive, when the president refuses outright to spend money. Richard Nixon did this back in 1974. You know, when you refer to Richard Nixon, It's probably not a good precedent. Congress responded by enacting the Impound and Control Act of 1974, which sets a process by which the president can challenge spending that has been duly appropriated by the constitutional branch that is in charge of actually legislating expenditure. Basically, you send a notification to Congress that you don't want to spend this money. Congress has a certain amount of days to take up the resolution. If they don't do anything, the money has to be spent. If Congress acts, then the president can reassign the amount of money that is being challenged. The current OMB director has stated publicly that he believes the Impound and Control Act is unconstitutional, so they think, or at least their theory is that the president has unlimited power to stop spending, disregarding essentially duly appropriated funding by Congress. Moving fast, because I know this has been mentioned before, but this was the world we had before January 20th. U.S. allies in blue and countries leaning with the U.S. in light blue, leaning with China, and allies with China in red and different shades of red. And the only line are gray. This was, as I said, the world when Donald Trump was sworn in as president. Not everything was champagne and roses in this world. I want to mention that. There were significant global imbalances. The United States economy suffers from a very low savings rate. That low savings rate translates both into budget deficits and trade deficits, which are financed by the rest of the world. That's the real the real factor driving the trade deficit in the United States is the American overconsumption, if you will. And on the Chinese side, you have the opposite. In China, you have well over 30% of savings of GDP. Those savings are not translated into consumption because there are severe restrictions on consumption in China due to different policies. That money is invested mostly in the real estate sector in China, which has recently undergone through a bubble, and whatever is left is invested in the United States. So you have both imbalances in the United States and China that were present here. However, the US bloc clearly had a larger GDP share of the world. If you look at 2022, almost 2/3 of the GDP share was between the U.S. allies and countries that leans with the United States. If the United States had wanted to lead a bloc of countries and face whatever Chinese threat they thought was in the horizon, they could have done so. The combination of the United States, Canada, Mexico, the European Union, and a couple of other allies like Japan, Australia, and the United Kingdom could easily have presented a formidable challenge to China. They opted not to do that, though. These are the shares of global trade between blocs. If you look at the blue graph, most of the world trade as of 2022, 2023 was within the U.S. bloc. The Chinese bloc was growing, trade with China was growing, between the US bloc and the Chinese bloc, but the US in total numbers, in absolute terms, was still significantly stronger. This is the red line is the trade within the China bloc. It's significantly lower. So again, if the United States had wanted to create a Western bloc to face whatever Chinese threat they thought was in the horizon, they had more than enough resources to do so. They decided not to do so. What we have then is the highest tariff rates since the Smoot-Hawley tariffs in the early 1930s. Look at the jump there on April 2nd and April 9 on the average tariff. The United States, I want to highlight, has imposed 5 different tariffs over the last 8 years. There are Section 301 tariffs, which are imposed on countries that are deemed to be undertaking unfair trading acts. There are migration fentanyl tariffs, around 20%. Those are in Canada, Mexico, and China. There are sectoral tariffs on aluminum and steel. There are tariffs on cars and auto parts. And then there are the reciprocal tariffs that were announced on April 2nd. multiple exemptions apply. So we really don't know. It's basically on a case-by-case basis. What we do know is that the average relative to the pre-Trump era is significantly higher. This is hard to read, but I'm just going to give you what it says. This is basically an invoice, a real invoice for T-shirts manufactured in China, imported into the United States on April 27th of this year. The declared cost of the T-shirts is around $18,000. Total tariffs imposed are around $34,000, 185%. That includes 125% due to the reciprocal tariffs, 20% for the fentanyl tariff, 7.5% for the 301 tariff, and then a 32% baseline tariff that applied to all textiles from China. That was the original tariff. So I don't know what ended up happening to this shipment. If I were importing these T-shirts, I would probably have left them at the dock. It's probably not worth to pay almost twice the declared value of the merchandise in tariffs to the United States. I want to highlight briefly what the IMF is expecting. It's very, those of you who follow the IMF know that they're not an entity known for their epistemic humility. And here they declare fairly openly that the resulting epistemic uncertainty arising from these tariffs is a major driver of the economic outlook. They're basically saying, we really don't know what's going on. I'm almost done. Puerto Rico benefited greatly from that opening of their global economy as we got FDI, a stable currency, access to foreign markets. Puerto Rico is currently part of the global supply chain for pharma and medical devices. So any changes on that will affect us. Disruption after 40 years of maximizing profits, after 40 years of minimizing costs and optimizing just-in-time delivery, where most supply chains end up in Asia, mostly in China. Disrupting that will have significant and severe impacts on the economy going forward. This is not going to be paper over if the United States end up imposing only 10% tariffs on everybody. I doubt many countries will say, okay, we're fine, we're cool, we're going to go back to where we were prior to April 2nd. I really doubt that will happen. The impacts on Puerto Rico are several. I just want to highlight the direct impacts through the cost of imported goods. Also, the indirect impact through supply chains, basically the cost of inputs. There's going to be a decrease in investment due to inflation and slower growth. What sectors can we expect to be hit? Mostly consumer goods, things like food, clothing, shoes, construction materials, automobiles. Some opportunities for Puerto Rico, maybe. Being inside the tariff wall has some value. Maybe in high margin, capital intensive manufacturing, we could have some opportunities in reshoring, nearshoring. Also in the defense industrial base, as the Pentagon seeks to modernize the weapon systems and change its procurement processes. But I highlight we have severe problems with our energy system and the Jones Act, which could limit the ability to sell to the United States. And thank you very much.
Thank you, Sergio. Thank you, Sergio. Next, we're going to go to Dr. Jose regarding the Puerto Rican economy and Puerto Rico economic trends and alternatives. And I'm going to just ask the speakers to be mindful of the time. Thank you.
Thank you. Thank you for the invitation. I have enjoyed being here, and I should start saying that my views are only mine and that I only work for the University of Puerto Rico. I think most of the things that I want to start with have been said. Puerto Rico grew a lot during the last century thanks to the the industrialization program. But when in 2006, as many of you know, the transition period for Section 936 ended, and the economy has been going down in general. So as Sergio said, the economy of Puerto Rico didn't start in the pandemic. And I would like to point out this period here, funds, GMP, it grew by less than 1%. By the way, we don't use GDP in Puerto Rico because it is inflated by the transfer pricing. So, but the GMP, it grew by 0.5%, just by 1 year. We received, the economy of Puerto Rico received back then $6 billion. And look what happened then. The economy went down. So as you can see. So I think, as Hegel said, we learn from history that we don't learn from history. That is exactly what is going to happen now. When reconstruction funds ended, yes, we're going to observe some growth. We're going to observe employment going up, but it's going to go down again if we don't establish a new, or we don't implement a new economic model. This is, here I put the U.S. subsidies received in Puerto Rico as a share of the GNP. GNP is the gross national product. It is not inflated by the transfer pricing. I don't have a lot of time to explain that, so just believe by faith that this is the right measure of the economy of Puerto Rico. And the U.S. subsidy includes what I call earned transfers. So Social Security benefits, veteran benefits are excluded from this definition of U.S. subsidies. Look what happened after Hurricane Maria. Huge increase in U.S. subsidies coming to Puerto Rico, especially because of pandemic and reconstruction funds. By the way, I'm not opposed to those funds. Those funds were badly needed. We really needed a Marshall Plan in Puerto Rico. We really need to reconstruct our infrastructure. What we don't need is dependency. What we don't need is to rely on that and have a lot of illusion. There is a concept called in economics the Dutch disease that has happened in many countries, where the private sector, the public sector relies on the discovery of, I don't know, a new mining or something, and they just disregard manufacturing, they disregard agriculture, they disregard services. But once that mining sector stops growing, then the whole economy goes back to the pre-discovery period. So I think the Dutch disease in Puerto Rico is happening with the federal funds. We have not put a lot of attention to the productive sectors. As many of you said, yes, population in this period, in this bubble that we are living right now, have been stabilized. Net out-migration, yes, actually it is positive during the last year. This is measured by the Census Bureau. Births and deaths, yes, we still have the, this gap. Births have been more or less stabilized. Deaths have been going down a little bit, not by much. The total employment have been growing after, as expected, after these reconstruction periods. Especially self-employment have grew a lot during this period. And there is a lot of people that have started their own business during this period, especially related to construction. Net revenues, I have data here from December. This is the last period that the Department of Treasury in Puerto Rico updated the data. We have seen that it has been going up as well, as expected. Because if the economy grows, the share that goes to the government as tax revenues also grows. Here's the inflation data. I don't believe much in this data. It is prepared by the Department of Labor. They say that in March, which is the latest data that they had, inflation in Puerto Rico was 0.9%, less than 1%. This is less than half the inflation rate of the United States. I don't believe it. This is a more open economy than in the United States. And this is because they have problems in measuring this. They measure a lot of things by hand. They are not using any electronic devices to measure the data. They don't include many construction material there, and so on and so forth. But I do want to point out that look at what happened to food in March. It increased by 5.4%, housing, medical care. Much of this have been driven by the decline in the transportation costs, especially in gas prices. But the kilowatt, surprisingly, has not declined in Puerto Rico during this period, even though we use a lot of diesel to produce energy. Poverty has declined in this period, not just by the reconstruction, but also because of the child tax credit and the earned income tax credit. I would like to point to measure specifically what has been the impact of the earned income tax credit, but the government didn't want to share the data. So yeah, that's some of the challenges that we have right now. Let's look at some alternative. Jan, me, and another colleague, we measure how economies grew better in the long term. We took like more than 100 countries. And we found that countries that just focus on one sector, in the long term, they didn't grew as good as countries that have a diverse growth. We call it balanced growth, where every sector grew in a similar manner. I think history in Puerto Rico shows that one of the problems with the industrialization that we have in Puerto Rico is that it was led by a single sector. And you know, agriculture was left behind, services were left behind, tourism was left behind, and I think we don't have to repeat the same mistake. By the way, I have seen a lot of expectation about reshoring in Puerto Rico. We have been looking for new federal tax incentive for more than 20 years. And I still remember when I was studying in the UPR 20 years ago, and they were talking about Section 245A, and they say, oh, yeah, they're going to approve new federal tax incentive, and we're still trying to find that, but unsuccessfully. I do believe that we have to look at other alternatives and not put all our eggs in that basket. There are profitable niches in the agriculture sector. We need to develop more tourism outside the metropolitan area. We need broad reform, not just looking to stimulate one sector. Einstein used to say that expecting different results by doing the same is the definition of craziness. And we have been giving tax incentive in Puerto Rico for more than 50 years. There was a period under Operation Bootstrap, that's the English name for Operaciones Manos a la Obra, where tax incentives were conditional. They say, if you go to Maricao, if you go to Las Piedras, I give you the tax incentive. If you stay in San Juan, I won't. But guess what? Since 1999, in Puerto Rico, we have moved to unconditional tax incentive. I give you the tax incentives, and you do whatever you want. In that way, benefits have not been maximized. Yes, the government have been measuring the ROI, the return on investment, but that doesn't measure maximization or redundancy. Look at Act 22 of 2012. They said 0% on tax gain on capital gains. But why 0? Why not 1%? Why not 5%? Nobody knows. I think we have to move faster to conditional tax incentive, and successful cases all around the world, such as in South Korea, they said to local industry, you have to move to export more and to create more employment, or I'm going to reduce your tax benefits. And I think we have to do something similar in Puerto Rico. And in the case of multinationals, they need to buy more to local businesses so that we can concatenate those foreign investment with local investment. And that's something that I have been hearing in Puerto Rico from economics from, I don't know, maybe 50 years ago. I'm not 50 years old. I have been reading that. I think we need to invest more in higher education. If you look at the growth, economic growth theories, the factors there are interest rate. We don't control interest rate in Puerto Rico. Population, we don't control borders in Puerto Rico. Physical capital, we don't control federal tax incentive. And human capital and research and development, that's the only factor of production that we can control in Puerto Rico. But guess what? The University of Puerto Rico has been under a severe austerity that has reduced the number of attractive appointments. So 20 years ago, 30 years ago, we used to have a lot of prestigious scholars from all around the world, but right now it's very difficult to hire them because of austerity. In the University of Puerto Rico, we have more than 75% of journal publications in Puerto Rico and more than 80% of the patents. And so this is the effect of austerity. We used to rank internationally in the position 1,219. 7 years later, we went to the position number 3,000. So I think that instead of going there, we need to look to be in the first, 500 universities in the world. We need a new fiscal rule. What the Constitution said that we need to have balanced budget is procyclical. Procyclical is that it follows the business cycle. So if the economy grows, we're going to have the impact of the budget is going to stimulate that growth. But if the economy goes down, that balanced budget is going to affect or exacerbate the decline in the business cycle. What we need is a counter-cyclical rule. So we need to, in that sense, amend the Constitution so that when the economy is growing, the government should save money, not spend more. Should save money, and then when the economy goes down, that money can be used to stimulate the economy, and in that way, we avoid a fiscal deficit. This is something that, colloquially, people say we need to save en las vacas gordas so that we can spend in las vacas flacas. And that's something that many countries that have been in debt crisis, they implement successfully. And if they follow it, they create a good reputation in the capital markets. We need to help people to transition from the informal economy to the formal economy. We need the benefits in Puerto Rico of the Nutritional Assistance Program. Do not allow people to work a lot in order to receive those benefits. In the United States, they have an income eligibility that is higher than in Puerto Rico, and I think we need to allow that so that people can work more formally and stop being under the table or off the books. We need to keep the earned income tax credit, and that is something that can help with the income inequality that we have in Puerto Rico that Gustavo already pointed out. There have been, in 2023, the Department of Treasury of Puerto Rico collected more than $200 million in custom revenues. I don't know what they did with those custom revenues, but right now those custom revenues have been going up because of the tariff of the Trump administration. I think we need to use those new custom revenues and the new taxes that we are collecting from sales tax in online sales to reduce the IVU, to reduce the sales tax, which is really high. It's actually the highest when you compare it to the states. And in that way, we can balance or counteract the impact of this tariff, especially for consumers and for the cost of living in Puerto Rico that is high. We need to improve statistics. There have been a lot of research that if you improve a statistic, you can allow more economic growth. If people don't believe in data, there is a lot of conspiracy theories will come up, and we don't want that. We need to substitute more imports, increase exports. We need to take advantages of profitable niches in every sector. And yes, I'm glad that I was one of the first to accomplish the 15-minute limitation. Economic growth. But I did it for my daughter because she's hungry. She's back there. Economic growth in Puerto Rico is dependent on federal funding, and it's ephemeral. So don't put a lot don't have a lot of hopes on that kind of economic growth. The fiscal board projects a negative growth for this fiscal year, and I believe in that projection. The Trump administration, we can expect higher inflation, not just because of the tariff, because also deportations that are going to have an impact on the construction sector in Puerto Rico, which is the leading sector right now. We're going to expect high interest rate, and it is hard to find new additional federal funding. So I hope that we can start thinking outside the box. Thank you.
Thank you. And our last presenter, Jose Villamin, from the CEO of Estudios Técnicos. The floor is yours.
No longer.
No longer?
No longer.
Okay.
I'm no longer CEO of Estudios Técnicos. Happily.
Former.
Former.
Thank you.
Happily retired from Estudios Técnicos, although I still keep my fingers in there. But I'll be very brief. Basically, we can skip this because this has been discussed, thoroughly here. But I wanted to point out the issue with housing. Housing, we produce a housing affordability index, which tells you that basically a person with the medium income can purchase a house with a median price of housing. So if 100%, if that's true, it's 100%. What happens in Puerto Rico is that has been falling dramatically. So now only 61% of the people with median income can afford to buy a house with a median price. And this is, I think this is a significant issue because it speaks to the fact that we do have a housing situation which is very, very, very serious. Housing accessibility is one of the key social problems that we have. This is a consumer's basically financial status, and this I think is very significant. We economists tend to talk in aggregate terms, but look at this graph. The savings rate in Puerto Rico has gone down significantly to the point that in 2024 it was only it was negative 1.7. In other words, people were saving. The savings that they accumulated after particularly the hurricanes and then COVID are now being drawn down. And this is key because when those savings run down, at the end you might have less spending capacity. The net worth of families has also gone down significantly. If you look at 2019, 31% of total assets was net worth. It is now 14%. Again, that speaks to the fact that people are saving and not accumulating additional wealth. You look at federal funding that has been thrown around. The figures are deceiving when you just look at the 46%. For the housing department or housing programs, it's 96%. For family, it's 90%. For health, it's 68%, and so forth. Executive branch, other, there's 48, so on. But those three, health, family, and housing, the dependence on federal funding is immense. So, one shouldn't just look at the 46%, but see how that 46% is distributed. And some of the agencies in the government of Puerto Rico, which is this, the Department of Family, based 97% is federal funding. For the Administration for the Integral Development of Childhood, it's 95%. The Public-Private Partnership Authority, it's 86%, and so forth and so on. So how that 46% is distributed is very significant because it is not distributed equally. This other graphic, basically what it tells you is that entitlement funds for Puerto Rico, in other words, things that we paid for, Social Security, Medicare, and so on, roughly are 21 billion, whereas discretionary funding is roughly 30 billion, so 39 billion. And this is something which people tend to overlook. But if you look at, for example, Social Security benefits, in fiscal 24, there were almost 12 billion. Social Security is roughly 23%, or 1/4% of all federal funding coming to Puerto Rico. The other ones is Medicare benefits and so forth. Medicare is also something that we actually pay for. So that 20.7 billion basically is health, Medicare, and nutritional assistance. And those things shouldn't, one would imagine that if the rule of law prevails, they shouldn't go down. Imports to Puerto Rico are 60% come from the United States. So we feel that will have will mitigate the tariffs that the Trump administration is putting in place, although many of these imports that come from the United States are re-exports from the United States. So the United States will pay a tariff, and then we'll get the result of that. Essentially, this graph basically tells you that the United States makes up around 57% of goods imported into Puerto Rico, which basically provides the basis for indicating whether U.S. tariffs will have an impact here. The main countries from which we import would be Ireland, Singapore, Colombia, Mexico, and to a lesser extent, China. Those five would be the biggest exporters to Puerto Rico. So the tariffs, when we calculate the impacts of the tariffs, these are the places that we have to look at. Ireland is particularly important for the pharmaceutical industry. So any taxes on pharmaceuticals will basically, or tax tariffs imposed on Ireland will probably impact the pharmaceutical industry. Now, when we look at what are the areas that we can look at possible drivers of economic growth, basically federal funding, construction industry investments, 50% of GNP is still is the amount of funds obligated and yet to be distributed. That's a huge amount of money. Tourism has expanded basically because of the strong U.S. labor market, and we anticipate that it will continue to grow fairly rapidly, and become more stable around 2028, 27. The small and medium-sized ecosystem, small and medium-sized businesses in Puerto Rico have grown, and of course many people have said this is wonderful and blah, blah, blah. But when you look at the distribution, what you see is that out of the total number, basically about 60%, which it would be the ones over here, have fewer than 5 employees, which means that they're not really a reflection of a thriving entrepreneurship system, but rather a defensive growth in entrepreneurship system. And this is something that has to be looked at and not take the numbers as such. The other thing is, of course, that 57% of growth in the number of small and medium-sized enterprises are in the metro area, which fortifies or strengthens a perception that we have had that Puerto Rico is really two islands. There's an island which is, if you want to be generous, basically if you draw a line from Dorado down to Ponce, that's one Puerto Rico. West of that line is a very different Puerto Rico. Or if you want to be even more strict, if you draw a triangle that has 1 point in Dorado, 1 point in Caguas, and 1 point in Fajardo, that's 70% of the Puerto Rican economy right there. I mean, that might be changing, but that's what it is. I mean, Puerto Rico is not a homogeneous economy. On the contrary, it is highly segmented, even though it's such a small island. This is our projection or our baseline scenario for growth in Puerto Rico in the next few years. In 2024, in 2025, growth was negative, or not negative, I'm sorry, positive 0.7%. But beginning in 2026, we anticipate that growth will be negative until 2031 at least. This is a base case scenario. There's a pessimistic and an optimistic scenario that we produce, but this is our baseline scenario. And of course, that augurs very, very badly for solving key issues, such as the housing issue, the health issue, the education issue, and so forth. In many ways, the key takeaways from all this is that although there are opportunities, it is clear that Puerto Rico's prospects for the coming years will be little different from what the actual picture reflects. Slow growth, if any, continued social and physical infrastructure deficiencies, problems with housing affordability and access, fragile financial position of families, and continued outmigration. That, of course, is the profile of an economic system that we have spent an inordinate amount of time and effort propping up. If it had not been a failed system, we wouldn't be here today. And there would have been no Promesa, there would have been no FOMB, and there would not have been a meeting such as this one. Obviously, what we have done is we have propped up a system through federal funds, basically, to keep it alive, to keep it breathing. I mean, and if you take away the federal funding of the last 10 years or 8 years, whatever, there's not much left. So obviously, there's a need for a transformative approach to development rather than a tactical or punctual approach. And it should be focused on fundamentals. That means human capital, functioning infrastructure, institutional change, and so on. In the early 60s, Gunnar Myrdal, a Swedish economist, I think he's the only person who ever had two Nobel Prizes. I think one was in peace, and the other one was in economics, as I recall. Myrdal wrote an essay called Circular and Cumulative Causation. That essentially what it said was that once an erosion of economic fundamentals takes place, the market will intensify the process, as will poorly conceived and implemented economic policies. And we have had that in Puerto Rico. We have had poorly conceived and implemented economic policies. And let me make an aside here. This is not the FOMB's, the Financial Oversight Board's problem. This is a problem of the local government and political system. But what is more important is that once the process of the erosion in the economic fundamentals takes place, it is very difficult to change direction. And we are seeing that in Puerto Rico. Look at the massive amount of federal funds coming into Puerto Rico, and yet the economy continues to have a very, very poor performance area. I mean, we're looking at an economy that hasn't grown, that's now 13 or 14% smaller. I think Sergio mentioned that number since 2010. Obviously, something is very wrong. But what is more important, and this is something that I think one has to work with, is something that Harvey Perloff was an economist who worked in Puerto Rico in the 1950s. And he wrote a wonderful book in 1951 called Puerto Rico's Economic Future. It's still I think overall one of the best books on Puerto Rico's economy overall. And Harvey Perloff said, you know, the problem is that if once an area has been left behind, technically and economically, the effort to improve levels of living involves the greatest difficulty. So you have these two very renowned economists, one Gunnar Myrdal, Swedish, and one Harvey Perloff, an American who worked in Puerto Rico, and basically telling us the same message. Don't let things get completely out of hand, because you will not be able to reverse directions. And that calls for rapid and substantial interventions. If we were to speak of the economy in medical terms, what is needed is radical surgery rather than palliative care. And that is what we have provided for the economy through federal funding. It has kept the economy moving at some point, but no economy can develop depending on such funding. And it is apparent, to me anyway, that with the present political structure, political system in Puerto Rico, and with the political actors that are involved in that system, that in the words of Acemoglu and Johnson in a wonderful book called Why Nations Fail, and it will be very difficult to reverse the trends that we have started, that we have experienced over the last couple of decades. So that's it. Thank you.
Thank you. That was a perfect closing for the formal presentations. Now we're just going to go to questions of the panelists. I know we're over time, but I think it's important before we make any closing remarks. I'll start with the chair.
Sure. Thank you very much. Thank you very much, Mr. Chairman. I just want to hear your opinion about Act 60. I don't see in the numbers that you present how the Act 60 really help or not help the Puerto Rico economy. Second, we're trying to work on a tax reform. So I also want to hear your opinion of how we're going to work with the tax reform. Another point that I'm interested is in, I hear about tourism, so that's what that one is okay, about the earned income tax credit. Because you talk about informal economy, that program do help a lot of people to come part of the formal economy. So I want to hear about your words about that one, and also having the benefit that I have the director of the OPAL here present, the way that we do scoring for our legislative bills. CBO and Congress, they use a 5-year, 10-year term. How would be the perfect number that you will recommend us here in the House and the Senate to measure the bills? Since the Puerto Rico economy is very variable, a 5-year term, 3 years, 10 years. So I want to hear a recommendation of you guys on that one. I do hear on federal funds, so I do get that point very quickly. Also want to hear about your opinion about reshoring and the tax incentive in Puerto Rico. How the incentive code.
I'm sorry.
The incentive code tax incentive code in Puerto Rico, Act 60. How, if we need to amend it, or any recommendation about the Act 60?
For tax reform.
Yeah. Tax reform and the incentives code for Puerto Rico.
Incentives code.
Yeah.
Well, one of the things we need to have clear is that tax incentives are no longer the powerful instrument that it was 15, 20 years ago. Mostly because everybody has tax incentives. And secondly, because firms respond to different types of incentives. One thing is when you're talking about mature industrial firms, or when you're talking about emerging high technology firms, you do not approach economic development and investment promotion by using incentives that are one size fits all. It's very different to attract a mature industrial firm, pharmaceutical or whatever, as it is to attract an emerging high technology firm. So, tax incentives might work with one group, but they will not work in another group. So I think one of the things that we have to, I don't know, Sergio and Jose can talk more about that than I can, but is get away from the idea that tax incentives are the solution. They are not. And I think it's about time that we learn that that's the case. So, I don't know, Sergio, Jose, whatever you want to add.
Yes, I think that going in that point that tax incentive is not a one-size-fits-all. Lawmakers in Puerto Rico would like to resolve the crisis that we have in access to physicians with tax incentive, the problem that we have with recycling with tax incentive, and tax incentive is not it doesn't work for everything. In the case, for instance, of local businesses, research has found that it is more important to provide training and advise those local businesses instead of giving the tax incentive. Because the tax incentive, it is at the end of the period. That you produce, you make some profits, and the government says, I'm going to reduce the tax burden on you. But sometimes businesses, especially startups, they don't get to the final period with profits. So they say, yes, I have a tax incentive, so what? I'm still in very marginal profit level. So that's what I was thinking. We need to look at tax incentive differently. We need to put more conditions on it. And if we look, for instance, the payroll protection program from the federal government during the pandemic, they didn't say, here's the money, do whatever you want with it. They say, I'm going to give you the money so that you pay the payroll, but at the end, you need to provide me your tax forms so that I can see the evidence that you kept the employment. If you didn't keep the employment, you need to return that money back to the government. In Puerto Rico, we don't have that. We have actually some industries that they took the money and they didn't do anything with it. That one of the cases is Rollmark. that was located in the center of Puerto Rico. And in the case of physicians and recycling, it didn't work. It didn't work, and we need to look at a tax incentive differently.
I want to follow up on that. I agree with both Joaco and Jose. We have to rethink. Tax incentives could be part of the toolkit, but are not the only tool. When you look at the literature on economic development over the last, 30, 40 years, there are essentially four things that economists look at. Basically, number one, it's access to capital in all its forms, both human and financial and physical. Openness to the world is very important, and I highlight that given what's going on in the rest of the world, not only because it allows small economies like Puerto Rico to take advantage of the world market for whatever it's produced here, but also open economies tend to have spillovers in the sense that you don't have to begin from scratch and learn to do everything from zero. You can learn from what other countries have done and import that technology, if you will. Also, innovation and research and development are the important factors in motivating, promoting long-term growth. And there we have some ideas as to what works and what doesn't, but there's still an ongoing debate as to how and what type of research and development expenditure is the most appropriate for an open economy. And finally, perhaps the most difficult one, which is the one Joaco was mentioning indirectly, is the institutional framework that governs the economy. Here in Puerto Rico, we did very well in the 1950s and 60s with a certain institutional model that it's not adapted to current realities in the world right now. And by that, I'm talking things like tax code, the negotiation that Jose is talking about with
Stability.
The stability, labor laws that need to be looked into, a whole bunch of things that need to be looked into. And those are very hard to get right. So I would say, yes, look at tax incentives, but also try to develop what's, for better of a lack of another word, it's called an industrial policy. What is the economic strategy for Puerto Rico? We haven't done that exercise in many years. And any economic strategy will have to address those four factors that I mentioned: capital, openness to the world, innovation, research and development, and the institutional framework. Those are the things which you'll be looking at in the medium to longer term to basically jumpstart growth in the island.
Yeah, I just a note. I think the key issue for an economy such as Puerto Rico are two things. One, that it has to understand that it is a very high risk. It has a very high risk profile because it's subject to so many decisions over which it has no control. That's one thing. Secondly, that it has to learn to manage its openness. It has to learn to create collaborative agreements with others, both at the government level and the private sector level. And it has to basically understand that managing a small open economy, such as ours, even if it is part of a larger economy like the United States, or even more so because it is part of a larger economy such as the United States, that it has to learn to manage that openness. And this, I think, is something that we haven't done anyway, but that's an aside.
My other question was on tax reform. Does it really help the economy? Because there is a myth, or the way that the behavior that the people of Puerto Rico behave is different from the states. If you give more money to the people in their pocket, they will spend more money on the economy. So if we approve, let's say we have the money and the numbers to approve organized, let's say the word, tax reform, does it really will help the economy?
Well, I think in order to have a tax reform that the Fiscal Control Board will not oppose, we need to find new tax revenues on the other side. If it's just tax relief under this scenario, it's going to be very hard to get it approved. So I think in order to be realistic, we need to find new tax revenues. When I was one way of finding new tax revenues are luxury taxes. When I was the president of the Association of the Puerto Rico Association of Economists, I made a survey to economists in Puerto Rico, and I think more than 75% of them agree with a luxury tax. Because luxury people will buy it anyway. In most cases, we call in economics that the demand is inelastic. But if you put taxes to goods or services that are elastic, we're going to see a decline in the demand, and you don't want that because it means lower economic growth. So if those tax revenues are found, then tax relief will be beneficial and can be approved. I don't see major reasons to be opposed to it. And yes, we need to lower the tax burden in Puerto Rico because we don't only have the income tax, we also have the highest sales tax if you look in any U.S. territory, and also when you look at the other taxes that we have, such as crudita number 1, crudita number 2, and the property tax, the tax burden is relatively high.
I also think it's important when we talk about a tax reform, we need to step back and determine what are the policy objectives you want to achieve with tax reform. Many things are called tax reform in Puerto Rico when they really aren't. I think we need a comprehensive restructuring of our tax system. It's way overdue. As Jose mentioned, we have both significantly high income taxes and a very high consumption tax. Most economies do one or the other or try to balance somehow. Also, we really haven't looked, and I know this is political poison, but we really haven't looked at property taxes in decades in Puerto Rico. The system we have is absurd. I remember in 2005, we were doing an analysis, a book-length analysis of the economy of Puerto Rico with Susan Collins from the Brookings Institution. Now she's actually the president of the Boston Federal Reserve Bank. And she asked me to explain how property taxes work in Puerto Rico. And she looked at me like, Sergio, you're pulling my leg. I was like, what are you talking about? I mean, it's like, you use 1954 prices? And then you, it's like, yeah, that's what we do. And, we have $1 million houses in places where 70 years ago we had sugarcane growing. So yes, I recommend that if you choose to go that route, which is your prerogative as an elected official of Puerto Rico, that you look at this with a very broad lens and don't put any more Band-Aids or complicate an already complicated system. Be very clear in your policy objectives. Try to simplify the system, broaden the tax base, and modernize the way we collect taxes in Puerto Rico. You're going to have a huge obstacle with the sales tax, though, because that has been pledged to pay bonds that were issued during the restructuring of the Puerto Rican government debt, and that has about 20 years to go. So that's going to be one big obstacle. But there are other things you can definitely look at, like income taxes, excise taxes, and property taxes. And look at it in a comprehensive, holistic way, which hasn't been done in Puerto Rico in more than 50 years.
Yeah, the typical approach to tax reforms in Puerto Rico has been from an accounting perspective. And you need to look at taxes as instruments of economic and social policy. If you just look at them as instruments for basically obtaining revenues and whatnot, it won't work. You have to look at tax reform from the perspective of what sort of structure of the tax system should be created to stimulate economic and social improvement. And that, again, has not been done because the discussion on tax reforms has been basically from an accounting perspective. And that, that's not the way to do it, basically. CPAs are very jealous of their
Don't worry, I'm not one of them. So.
of their ownership of the tax system. And I'll just make a very quick comment. We were asked by the Colegio de CPAs to do some work on a number of issues. And one of the things we proposed was a significant change in the tax system. Well, they published everything else except that chapter. They're very, very, they feel it's their property. It's okay.
No more questions. So thank you very much.
Yeah, vamos.
Cameron, you have any questions?
Que tengo hambre.
Okay. No more questions. As we bring this first economic symposium to a close, I want to acknowledge that we had various perspectives here. We had significant amount of commonality, some very unique observations. It was informative. I learned from you all today. And along with the budget, I think this is the most important conversation for the future of Puerto Rico. So I want to extend our sincere thanks to each of you for participating, the speakers, our panelists, and then the attendees as well, for your valuable insights, active participation, and actually your candor. What's clear is that the challenges ahead are significant, whether it's economic inequality, climate risks, or financial instability. We need to be thinking boldly. We need interdisciplinary solutions, and we need to listen to each other and have a continued dialogue. So I encourage you to carry these conversations beyond this venue, into your research, into the policy making from the legislature and into the communities. And let's not let this symposium be the endpoint, but a catalyst for action that we need. Thank you again for participating. Thank you for giving your time. Safe travels, and we look forward to reconvening in the near future. Thank you.
Thank you.